Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks much for inviting me on, Jim. It's always a pleasure.
Are the stock markets operating in nervous territory right now?
Well, they say the market always climbs a wall of worry, but I've got a commentary out now that said this wall of worry is different. I think you reach an accretion of worries where you can finally say, you know what, there's a lot of real stuff worth worrying about. And in that respect, the market is very, very, very overextended. I put a chart out with a commentary and did a little drum roll with what I call a hidden pivot resistance at 4661. And I somewhat tongue-in-cheek said, well, maybe this is finally the elusive mother of all tops. But I have to say, from a technical standpoint, there was logic there to say that. And, of course, with today's pretty sharp sell-off, so far I'm not wrong. So we'll see. My gut feeling is that the market will somehow come roaring back, although it never feels that way. But anyway, that's the way I look at it right now from a technical side.
Do you think we're going to see a major correction in September?
Well, it's just because everybody thinks it's coming, if it's coming at all, including myself, maybe it's already begun. We've got a kind of premature crash here in August. So it is a given, and another kind of contrary scenario would be that the collapse has started here in August, but it's going to be even worse in September and October. And we know that the market is so pumped, it's so violent, that the bear market that a lot of perma bears have been hoping for and losing money betting on for the last 12 plus years, it can happen so quickly that nobody really gets a piece of it. It's not like everybody was itching to get short here last Friday, so it's been the kind of rally that's impossible to short. But the other scenario is we're coming down now, but we're going to make one last gasp. Whether or not it turns out to be the last gasp, I would short the bejesus out of any new record high right here.
In a situation like that, should you be bailing now, just hold on to your cash and see what's going on?
Well, it's I say funny thing, but nothing funny about it at all. Everybody's in. Everybody's all in. And, of course, the baby boomers are sitting on fat asset growth to the extent that their 401k1 plans and all the retirement plans have benefited from this monster rally that we've had since the beginning of the first lockdown. So when you think of what could happen if the market goes down, if the market drops the way it could, it would really be devastating for the baby boomers in particular. And, of course, from a demographic standpoint, we baby boomers are all counting on, and I say this hypothetically, the millennials to bail out Social Security and Medicare. They're going to have to keep making payments, but the fact is they're just not doing well enough to pay the bills of the baby boomers. So the consequences of a stock market, a bear market, are almost beyond imagining. They're too horrible to think about. But of course, we have to be ready nonetheless. What my Charles Hugh Smith puts out, you got to always have to have a plan B, but he's got a plan C. It's like when plan B means just hunker down and live off the rations that you've stored in your basement. Plan C is much more radical. It means you may not even be able to get groceries or batteries in the stores, let alone toilet paper. So let's hope. You can't hope that Plan C isn't coming, because I think the bubble is pumped. The everything bubble, as it's called, is pumped to the extent that we're not going to have just a mild recession.
Is China deliberately shorting us on supplies that we need right now? There's a container shortage simply because China's calling the containers back home as soon as they're emptied over here with consumer goods, rather than waiting them to be filled with agricultural products from North America before they go back to Asia. Is that a deliberate strategy, or are they really that desperate just to have containers to make sure their own domestic market is served?
In some ways, you have to presume that China is a rational actor. So I don't think they would do anything to spite the U.S. other than, let's say, a geopolitical gesture. But when it comes to real goods, real trade, and things like shipping containers, I think they are acting genuinely in their own interests. And the place where that's most apparent, I hate to say anything nice about the Chinese, and I never have, but in this one instance where they're really cracking down on the tech companies, it's really, they're doing a good thing. They're basically saying we don't like our markets to trade like the nutty, crazy, greedy, stupid American markets. We want capital not to go into these stocks to trade in a speculative frenzy. We want capital to be available for real companies that do real things. And of course, the U.S. is we are 180 degrees opposite that. There's a speculative frenzy. I have an investment as an insider investor in a company with a great technology that I think could change the world. It has to do with analysis of terabytes, using terabyte spectrum to detect the presence of something called volatile organic compounds. And I honestly feel the company could change the world. They're starving for cash. In the meantime, you've got these 10, 15, $20 billion valuations for companies like food delivery companies that'll never make money. And so they're, China is just, they're really getting ready for hard times, and they're not playing around. They do the things that they need to do to make their capital markets function in ways that we here in America no longer even think about, let alone wish for.
We'll have more with Rick Ackerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's going on with crude?
Well, it finally is responding to, if not a drop in actual demand, it's falling on the basis of perceived, the possibility of falling demand, because the lockdown with the Delta variant bearing down supposedly on earthly commerce is going to cut back on demand for crude. So I see crude going lower. I'm not going to trot out any of those incredible what could happen in a bear market scenario where crude goes back to $10 a barrel or whatever, but it does look lower to me, and for once in its life, it's actually discounting some shred of real logic out there in the world.
President Biden canceled the XL pipeline, his first act as president, the first second he could do that, cutting off future supplies of oil from Alberta to the U.S. That leaves, although Canada is still the number one supplier of foreign oil to the U.S., Russia is now number two. What happens if Putin decides to use that as a lever on the U.S., cut off your oil?
I don't think they would try that just to make trouble. As far as Biden's part of it, Biden is just being Joe. He has a reputation for never in his life making a correct decision. He's never done the correct thing, and I think he was just trying to preserve his perfect record with that pipeline business. But I don't know. The energy war would be a pretty serious matter, and I don't think Russia or China is eager to go to war with us. Although there could be a curtailment of energy resource flows in some global crisis.
Now, going back to the wall of worry, I know you've said deflation is a real possibility in past broadcasts. Do you think deflation is still just around the corner?
Well, to make it a little clearer, I don't see it as a possibility so much as an inevitability. It can't settle any other way. And I guess maybe you could argue we would have some sort of hyperinflation first, but that means right now, and it's not happening. So my deflation scenario really comes out of kind of waves of bankruptcy that wipe a lot of zeros off the balance sheet. And a good piece of that is coming from the derivatives market, or not a good piece, really, substantially the most of it, a big part. It's a $2 quadrillion market. So when all of the Flibberty Gibbet credit instruments collapse, what the world now sort of plays with is wealth in some digital form, some fungible as money form. It literally vanishes. So it's very deflationary when 8, 9, 10, 11, or 12 zeros disappear from what you might call the global balance sheet. So that's where I am with deflation. And right now, you can only say that we don't have quite the inflation that everybody expected, or even that I would have expected, from the amount of stimulus that's been applied. There's certainly a lot of trillions of dollars out there, and I think they're nothing. They're not even a drop in the ocean when that $2 quadrillion derivatives market starts imploding. But as far as why don't we have more inflation now, my feeling is that it's because it's not the 70s inflation where you had a spiral with wages driving prices, then prices driving wages. You had sort of an organic fusion reactor there to keep inflation going. The only thing that's keeping inflation going right now, and the reason why we can't keep inflating, is it's based entirely on an asset bubble. To some extent, yeah, it did get a boost. Inflation got a boost from the checks sent out to everybody, but even that's disinflationary now, because the landlord support checks, which went to the tenants, it's sort of subsistence right now, just keeping the landlords alive. So we don't have this spiraling out of control inflation. And I'm wondering myself whether it's really just beginning to sniff the big one out there that I keep talking about, and that I just mentioned in connection with all those zeros disappearing from the balance sheet.
What's going on with Bitcoin?
Just nutty as ever. I've got a target a little bit higher than the last top. It's 49,000 and change. Let me give you the exact number. Let's see, 49,848. And I like that. I think it'll get there. It has nothing to do with the real world, or even with anything other than a speculative frenzy. I guess there was a time when we all kidded ourselves that people would use Bitcoin for transactions, but that hasn't happened much. And it's used almost entirely for speculative purposes. So everybody's playing with these colors, and they're trading up. I got red, and I got green, and I got blue, and there are 1,800 different flavors of cryptocurrency. But and the big guys are all talking their book, like Paul Tudor Jones and Michael Saylor, and I'm sure they've done quite well, and I'm sure they're smart enough to know that there's a point where you take your profits. But on the other side, you hear such things that they make logical sense. that Bitcoin was simply created by the globalists to have a currency that they could issue without any reference to the Federal Reserve. In other words, they could inflate with Bitcoin, and it doesn't have to go through the mechanism of the Federal Reserve. So who these globalists are, I'm not quite sure, but it does make sense to me that Bitcoin is just kind of an experiment. But when the government or even the globalists get involved, the Bitcoin that's currently held may not be redeemed at par.
Well, China has done its best to ban the mining of Bitcoin, and Alberta apparently has just signed a deal with the company to move mining operations there, and they'll use Alberta's vast fossil fuel resources to energize it.
Well, that's just what I was talking about earlier, that China, some of the things that they do are actually correct. They're doing the right thing, and they're looking at Bitcoin and saying this is just a lot of speculative blather. We don't really need it. We certainly don't need it to the extent that it bleeds off energy, that it takes a lot of power to create the last of the 21 million Bitcoin that Satoshi's formulation allowed. So as we reach that the level of Bitcoin being maxed out, of course, it takes more computer power to solve the algorithm to solve the blockchain, and it makes it more and more power intensive. So the Chinese are just sort of recognizing that fact and saying, you want to do Bitcoin, do it somewhere else.
Rick, anything else we should be keeping a close eye on right now?
I think we've covered some good ground there, Jim, and I still favor the barbell that we talked about earlier, a hedge that puts gold against treasuries. Nobody wants either right now, although I think even the bears are starting to pay attention to the rally in T-bonds. It certainly exceeded a lot of expectations, and certainly there was such a big bet on rising interest rates that are not really rising these days that you may even get the unwind effect, taking bond prices significantly higher, yields lower. And so I still like that play.
Rick, thank you so much for chatting with us.
It's always a pleasure, Jim. Thanks much for giving me a chance to share my thoughts with your audience.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to us at info@howstreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.